Hello, everyone. Welcome to Economic Impact. We are Wednesday, February 18th, 2026. Stéfane, great to see you again.
Nice to see you.
Wait, what a week, and we're only Wednesday.
It's a big week for Canada.
I know, it's an amazing week for Canada.
Yeah, I think
so before we start, the last time, I think we're going to do it every call because I love this. So all the little brackets were on the right side of the line. So can you tell us what happened in the last not even 4 weeks?
So we had positive returns when we saw each other last month.
Yeah.
The year is still young, obviously, but it's actually more positive than it was last month. And notice, Nancy, all positive for everyone except maybe one market, the US, which we'll speak to. But notice that, everything related to the reflation trade that we spoke to last month shows positive returns. Emerging markets, the S&P TSX, Europe. So all in all, it's still this concept that earnings are likely to accelerate this year with higher commodity prices.
And as it was in 2025, it's still very concentrated, the investments that are being made. So you have a slide that's very interesting about AI.
Well, what happened last year and what people said, well, okay, AI, if you look at the hyperscalers, they're investing a formidable amount of money in this. And for 2026, the investment plans is more than $680 billion. That's only 4 companies, Nancy. So that would account for roughly 2.1% of GDP, with just 4 companies.
Wow.
This has never been seen before. If you want to make an historical comparison to other big projects in the US, if you go back to 1850, 1859, when they built the railroad system in the US, they were spending 2% of GDP, all these companies put together. If people want to compare now the AI cycle versus the internet cycle, well, the internet cycle was consuming 0.8% of GDP annualized. So the 2.1%, these people, are they spending too much? Will this be a fuel of Dutch disease where the AI sector is taking all the capital and with diminishing returns? So that's what we're seeing this year, a little bit more concern. So when I said the the S&P 500 was down year to date, it's mostly because of IT, because look at everything related to what we spoke to last month, US reindustrialization, rebuilding the electrical grid. All these sectors are up 16, 21, 12%. So it's a big sector rotation happening within US equities.
So that means markets are thinking that this reindustrialization will work. That's what we're seeing here.
Yeah, and as you said before, and as you told me before, does that mean the AI cycle is dead? No, but everyone was overweight AI coming into 2026. So it's a sector rotation, given the question marks regarding the profitability that was promised. Will they deliver this year?
Yeah. And last time we spoke about gold. So I think it's going to be a subject of this conversation again today.
Oh, we have to, because so anything related to the energy sector, materials, industrials doing good in the US. Canada, energy is doing well. If you're going to deploy, we spoke about it. If you're going to deploy AI, it's energy intensive. So a big increase here. Notice materials, however, it's up 18.3%. And it's having a formidable impact on both our economy and the perception of what's really happening in the economy is being, I think, biased by gold. Let me explain. A lot of people are saying, well, Canada is finally diversifying out of the US. We have found a formula to diversify. Look at the exports to the US down 10%, which has never been seen outside a recession. And non-US exports are up 20%.
So who's our new friend?
Well, people are asking me, name countries that are a new friend, and I can't find any, Nancy, because it's not a friend, a country friend per se. It's really one commodity that is our best friend right now. It's gold prices at roughly $5,000 an ounce. If you go back to 1791 and you price gold in $20-25, that's well above the historical average of $650.
So there's a funny story about the $650. So it talks about men's suits. So you want to tell us about it?
Well, I can only speak for man's suit, unfortunately, on that one. But historically, people have associated the
ounce.
Yeah, the equilibrium value of gold, 1 ounce of gold should be equal to your ability to buy a decent suit if you're a man. So right now, as you can see, at $5,000, those men at home that have a lot of, some ounces of gold,
can have a very nice suit.
Or they can go shopping for many suits. But
yeah, and 650, you can still have a reasonable suit in Canadian dollars today, right?
So the point is, we're well above the historical average. Last time we were there was 20 years ago. You can remain above 650 for quite some time. The geopolitical complex or backdrop is supportive of gold prices, but it's stretched. So our view for the next 12 months or so, it's a target a range for gold of 4,000 to 5,000, 6,000. So it might be volatile, but we're not collapsing it because we know that central banks are buyers. So there is still some support, and U.S. dollar is still set to depreciate.
And so without gold, what would we look like?
Well, it really shows that we don't have really good friends right now, new best friends, because the reality is our trade balance is a negative, a deficit of $30 billion right now for Canada. If you were to exclude gold, our surplus on gold, which is driven by prices, our trade balance would be a deficit of $80 billion, 2.5 times greater. See how important that is?
Yeah.
Because that's supporting the currency, it's supporting the stock market, and it's supporting our exports.
Yeah. So gold takes over all the other categories now. It's never seen before?
Well, if you think this is interesting, well, it leads to the next one, which shows that the market capitalization of gold stocks surpasses energy for the first time ever in Canadian history. So that speaks to the importance of gold, because that's been a key driver of the S&P TSX. So gold is still popular with investors going into 2026, because a lot of people we're not overweight gold, so there's some catch up there.
Yeah.
You have to go back to neutral. So it is supportive, and as I said, the backdrop is supportive, but it's important to tell our clients that this is a stretched.
Rebalancing, diversification, those are the principles, right?
It's a crowded trade. Doesn't mean that you don't remain crowded for a while, but be wary of how gold is impacting the economy and the stock market.
So we have a couple of minutes left. Can we talk about the announcement from our Prime Minister, Mr. Carney, yesterday?
Okay, so we need to find new friends, right? And
we do.
One way, in order to find new friends, we need to reindustrialize. And we have spoken to that last month or in previous discussions, and the reality is that was the big news that came yesterday, where the federal government is pledging to spend billions of dollars in order to find us new friends. How do we do this? By reindustrializing. And it's a big deal, Nancy, because it's the first time that I can recall in many years that we're deploying an industrial strategy based on our defense spending with a procurement system that might favor our domestic corporations. And you know what? It's so big in terms of money spent, 5% of GDP. We haven't seen this in the Korean War. It might entice people to come from overseas and invest here in Canada with a transfer of intellectual property to actually build stuff in Canada to benefit, obviously,
our economy.
And the manufacturing sector, right?
And therefore, if we are investing all of this, we'll create jobs, we'll create good jobs. How does it look right now?
We need jobs.
We need jobs?
Yeah, well, it depends where you live, but really, the reality is Quebec and Ontario, who are mostly or the biggest manufacturing hub in the country, have seen disappointing job markets. So full-time jobs, they're barely up in Ontario, they're down in Quebec, but total employment is down in Ontario. So out west, if you want to look at the 4 large provinces, in order to simplify the chart, there's a regional divergence. So you can see who's being hit with the uncertainty about the manufacturing sector, hence the importance of this plan that was unveiled yesterday. Finally, we are willing to reindustrialize, and that's how we make new friends.
Well, Stéfane, thank you for this great conversation. Looking forward to next month. There's going to be a lot of things happening, I'm sure. Thank you for all of us for attending this little conversation, and we'll see you again next month.